Right. Hello, thank you, Scott. Hello, Andy.
Hello, Steve. Hi, Scott. Hey, everybody.
The program snuck up on us quick. It's another week, so it's another Trade of the Week themed webinar. October 9th is the date. And as people continue to straggle on in here, we'll go through the beginning slides. Just the old reminder, we're a software as a service company, technology developer. We're not registered investment advisors, so please, in these webinars, including this one, of course, do not take anything you see or hear and misconstrue it as personal financial advice for you. We're merely showcasing some technology and giving some opinions, but again, please, if you need financial advice, you got to seek out the guys who took the exams and you pay the fees to. So this slide is always a good one. Just a quick reminder of how much time we are available during each week for support, help, ideas. You know, we've got Barry's room there, the live trading room on the right. It's a desktop snapshot. There's about 500 people every day that show up there from bell to bell. And there's a couple of great traders in there as well that kind of take the lead in terms of what's going on in the moment in the markets, and they're pretty good at spotting opportunity in there. And the best part about this room is it's free. Barry does a great job, almost to the point of a patron saint, of moderating a good room in there and keeping things focused, demonstrating trade ideas on his laptop, helping people if they have technology questions with trade ideas, and keeping people up to date on the latest stuff. So that's bell to bell every day that the market is open. Our live trading room should be up and running. The office hours, or excuse me, the afternoon webinars that occur typically at 5 p.m. Eastern, this being one of them. I helped Jamie yesterday in the office hours, and then we have today's Trade of the Week. Tomorrow, Brad and Dan kind of give us a peek at what's coming around the corner, the mad scientists, those two. And then Andy has some thoughts on Thursday's content after the market closes on Thursday. And then Friday, we do not have the afternoon webinars, but we have a 3-hour morning open session. Come one, come all. If you need some guidance, you want to learn how to maybe build a scan. The nice thing is there's 4 of us in there, Sean, Andy, Jamie, and myself. And sometimes it takes all 4 of us to really come to a really good solution. So a lot of brain power in there on the Friday support sessions, 11 a.m. to 2 p.m. Eastern. You do have to sign up for those. It's in our typical webinar links, but that's our Friday webinar. And then below that is a TA University. If we go to the next slide, it's Monday through Thursday, starting off on Monday with Beginners 101. Sean takes you through a lot of the basics. We finish on Thursday at Advanced with Jamie and at the 401 class. And those videos have been recorded and archived. You can always just drop an email to info@trade-ideas.com if you wanted to take a look at that 4-part video series playlist. You certainly can. Education is good. So all of that, all of that combined really have given us a great user base, growth cycle. And it brings us to our themed, yes, the barbershop quartet on Friday. When we start running out of content, we go into barbershop quartet. Of course, I'm the baritone. Back to our theme slide, no man is better than a machine, no human is better than a machine, I would say, and no machine is better than a human with a machine. And what that means is the technology that we have here is a great ancillary tool for humans. No machine can pull it off altogether. That's one of the things we constantly talk about when we talk about our AI. Our AI is more of a gray box. A black box would be a machine. The machine enters, the machine exits. The machine enters, the machine exits. No touch. So all happening inside of a black box. But the terminology for the way we like to use Holly is gray box. And that means the value of the AI is in the generation of the entry signal. And then from there, it's up to you to manage the trade. Maybe you can follow her if you'd like, but it's up to you to manage the trade. What's the market doing? What's the sector doing? What's the stock doing? The volume and all that stuff. And so with those two components together, the human with the machine does a heck of a lot better than just a machine by itself. The machine and the technology give us nice curated ideas, small pools of stocks and ideas to hone in and zoom in on. The market is full of almost 8,000 stocks out there, and our technology really helps the traders that want to trade equities over futures hone in on what is in play each day and being a different day. The technology does that, and then of course the AI does that even more, giving us statistical probabilities and lack of emotion. So this is a great slide for the theme when we want to talk about our technology. The agenda today, market recap, not quite out of danger yet, and I'm going to explain what I'm seeing on the heels of yesterday. I know some people were also in yesterday's webinar, and we'll go over what we discussed in yesterday's webinar now that we have another day of data in the markets to see what's going on out there. The recap of the AI Holly was kind of a sluggish day, which mirrors what happened in the general market, but Andy will give you some thoughts on that. The trade of the week, which the webinar is focused around, was DNR, Denbury Resources. It's an energy company. We'll talk about the genesis and how that came about as the trade of the week this week. I'm going to show you my screen here in a second, and if some of you missed yesterday's afternoon webinar, we have some good news, and that is that as everybody has been asking for, the 3 Holly segments have now come out of hiding, and we have a developer's version that we're working on to kick and punch and try and break it before we release it to you guys in the next week or two as a beta version. But I'll go over some of the value of having the 3 AI Holly windows on one screen. Again, a lot of you have been asking for that, so we're ready. Review of last week's price alerts that I gave out. There's a couple gems in there, and then maybe a few new ones this week. But again, we got some thoughts on the market when we get to that point in time. So here we are. Let's jump right in. We'll put on the main daily chart here, the S&P 500 SPY ETF. And as we discussed yesterday, as I think some of you might have been in here, you know, I said this could very well have been a 3 to 4% pullback, a buy the dip pullback probably, you know, in the bigger picture of things. This is an uptrend that we're in, and the more we zoom out, the less ominous the selling that we had last week looks. Yesterday we had this green candle, and I highlighted that it bounced up and out of that pivot level and had a nice green color to the candle, but still finished unchanged for the day. And as we get to the NASDAQ next, but I said the same thing for both the NASDAQ and the S&P here. It's a wonderful setup for a bar reversal to confirm that this yesterday would have been the higher low in the course of an uptrend here. And early in the day, we did get a push higher, but unfortunately, it was squashed. All right, 2 big differences that we have here. We could have gone today. Option number 1, we didn't get, could have closed with a green candle on highs, and that's, I think, what the bulls would have wanted to see today to lean on yesterday's candle as a higher low. We did not get that. We had an attempt for it, and that attempt was quickly extinguished, all the way back to a perfect doji where the market opened exactly where it closed today, which I might add was a bit of a gap down. So now we have this giant kind of a topping tail, a bit of a bottom tail. The market definitely was throwing some elbows around today and didn't get anywhere. And I'm going to add maybe another little skinny layer of concern because of today's candle. We had every opportunity to bounce out and close on highs and bring in a higher low on the trend and a buy the dip, the whole thing, the whole 9 yards, everything we've been seeing for years now. But we didn't get it. We had an attempt and we had a rejection. So we have a nice upside wick there after a nice downside wick. Just a lot of noise going nowhere right here. But good news is the closing price was still above yesterday's pivot level. The bulls just would have liked to have seen a nice green candle push and close on highs and start to make that trek higher again. But no, it appears after today's action, we'll see what tomorrow brings, but it appears today's action, just price action wants to just wallow around and loiter at these levels here. No loitering. Let's see what the Qs have to show. So kind of the same thing with yesterday, 4 down days, big bottoming tails on each day, mind you. And what I was mentioning yesterday is this is not uncommon. The volume is incredible. The selling was real, but the psychology of the masses out there have been conditioned to buy the dip. And so at the end of each day, we had to buy the dip on this day. We had to buy the dip on this day. So what that means and translates into on the daily chart are big red candles with horrible volume to the downside, but they never closed on lows. You had that conditioned response, that Pavlovian response to jump in and buy the close. That's what's happened the last 3 days, including yesterday. And today, here we are with today's candle. Sure, it's a green wick. It's a net changed, maybe 58 cents above yesterday's close, but this one too, I had said yesterday we need a bar reversal, which would have been the high of yesterday's candle, and then follow through closing on highs. That's what the bulls would want to see. We didn't get that. We got, again, the same kind of a thing. We had a nice push out of the gates on the open, and then for the rest of the day under pressure. On the daily chart, that translates into a rejection wick once again. So, here we are. What I didn't point out on the S&P, my biggest concern is if we still just loiter and hang around down here, look at what's happening to these moving averages up top. They're bringing up the rear. They're crossing over, which they haven't seen in a while, and they're pointing downwards now. It's starting to come down to meet the price. That, in my experience, if we can't get a nice bounce and push back through and close above those, if we start to wallow around and loiter here at these levels, as these moving averages roll over, it's going to start to be a major headwind. And that's going to make it even harder, in my opinion, for a technical push to get back through those moving averages and then close above them. Also of note on the spiders, I said yesterday we barely closed above the 50-day moving average, which also on Friday was held. Haven't closed below that average for a long time. Well, we did again today, just barely. And then back to the Qs again, still well below its 50-day moving average. Same thing happening up here. The moving averages are rolling over and starting to cross and point down. Trust me, if this market wants to bounce, that's going to be major headwinds when we get to those levels. And that's a lot of years of experience, just pointing that out. I'm expecting that. The old IWM, the Russell 2000, was the one that you guys recall 2 weeks ago. We started getting a little nervous about how the Russell 2000 IWM could not participate relatively with the strength of what we were seeing in the other three, NASDAQ, Dow, and Qs. Notable of yesterday, and I pointed out with Jamie, was the 200-day. And if we look back here, the 200-day moving average did support the price back in early April. But now here we are again, touching the rising 200-day moving average. Yesterday and the day before, we wicked and then closed above it. But today we finished net down, red, 0.36 cents down, right above this 200-day. So the IWM is definitely loitering, and it's knocking on that 200-day a little bit today. Let's keep an eye on that one going forward too, because this was kind of the canary in the coal mine that rolled over first and told us that a lot of things weren't as they had been prior to the downtrend breaking here in IWM. And then lastly, the Dow did okay. It peaked its head above yesterday's candle for a possible bar reversal, but also finished in kind of a spinning top. No winners, no harm, no foul, no winners, didn't close any lower. But again, the price is just kind of loitering and hanging out down here at these levels. We need to get the price pushing back up and closing on highs to get the bulls feeling good about a continuation here in the upward trends. What was I going to say? Is there anything else I was going to say here? Well, something will probably come to me. Any observations you have over there? I know we were talking about something earlier, the bonds.
Yes. Before I get into that, I love your loitering analogy.
Loitering, yeah.
Much. Yeah,
they're not doing any good. They're not doing anybody. I'm sorry.
Go ahead. You asked me for my observation, then you step on me. No.
Well, I hear a joke. I got to say it.
Okay, go ahead.
No, I was just going to say you chose the word loitering because they're not doing anybody any good.
Right.
It's not building a base.
Exactly.
Just they're just teenagers looking for trouble.
In Starbucks.
Yeah. That's why I chose that. All right, go ahead. Sorry.
Yeah. No. It's just going to make another funny. I'm going to have to build a nice explosive loitering window, alert window. It's a new strategy, the loitering strategy. No, I think what I was going to bring up is Steve and I were joking this morning, back when we first started trading many years ago, about 20 to be exactly. The bonds, the market got to a time when it was kind of following the bonds around, and we had this guy on our floor. We used to have to go to a floor and trade. Couldn't trade at home like you do now, but and he was he was just always saying, watch those bonds, and of course it became a joke amongst everybody, him calling out watch those bonds. But anyway, I said, you know what, we're kind of in a watch those bonds market. You got to keep an eye on the bond right now, because people that's watching interest rates. There's a direct correlation from the movement you've seen over the last couple of weeks in the TLT and bonds in general, and interest rates, and what's happening in the market. So you might want to have a chart of the TLT up, or if you have some future exchange data that you got, keep an eye on 10-year or whatever bonds you want to watch. But you want to keep an eye on them, because they, if they roll back over again, maybe go up another half a day or something like that, start to roll back over, keep an eye on them, because the market may follow. It's been doing it over the last couple of weeks, and I would be surprised if it didn't continue, especially if we, start going down lower in the bonds. So, but yeah, the market, yeah, you hit it. Like we said last week, we're seeing signs that it's just could be petering out, but we've seen signs like this in the past, and we're definitely not going to call for a top or anything like that. But we've been throwing up some warning signs the last couple of weeks, and I haven't been happy, really excited about it in the last 6 months. But oh well.
Back to the TLT, watch this price action. Like Andy says, if tomorrow goes up and then wicks and then starts to roll over, if we break down over yesterday's lows, that means interest rates are going even higher. And I think the market was really taking notice last week as the rates increased. Today we did get a little bit of a reprieve, and that may be why we didn't follow through to the downside and didn't really move much higher either. But the 30-year Treasury, I think, hit 5%. Major mortgage rates were hitting 5% today. These are higher rates than we've seen in years. So if there's anything that can put a damper on a rally, it can be a sudden increase in interest rates for sure.
Oh, absolutely.
So keep an eye on that one right there. You want to add something?
Sure. No, you hit it on the head with all the other.
All right. Again, imprint on that IWM. I think if we lose that 200-day moving average and close below it tomorrow, again, I only say this because this was the one that started to peter out first, and so it's leading us, unfortunately, to the downside. Unfortunate if you're long 100%, but that needs to be kept an eye on, I think. And then, of course, like we just said, yeah, keep an eye on the bonds. If we take out that price level lower, that's going to be bad for interest rates. They're going higher. All right, so I think we knocked out the market recap. Did you want to take over? Then
Sure.
We'll talk about the different Holly stuff when we come back.
Okay. Let me go to my clean monitor here. And guys, many of you probably seen this in Barry's room or somewhere else, but this is our newest developmental version. I'm not going to steal too much of Steve's thunder here, but I did. It obviously, when I'm looking over all three Hollies, it makes it easy for me to look at this. This is going to be the Omni channel that you will have access to. And I think Steve may have actually done something a little different, and it's kind of. Did you make your own?
I did. I'll show them how. Yep.
Good. So I'm not exactly stealing your thunder here. This is a channel that you'll have access to, and I was surprised we were able to actually break outside of the container window in this channel. So I don't know if this is going to be something we do with other channels as well. I like it. Obviously more information, more screen. So I'm excited about that. But not really excited about Holly today. And let's look at the backdrop of the market. This is a 10-minute spiders over here, and let's just take a look at what Holly had to deal with. Remember, she enters and exits every trade on the same day. Okay, she does that for reporting, just makes it easier for accounting and reporting and all that. So we had a gap down in the market. This is pre and post market. I'm not crazy about it, but they do have it in this channel. And it's gap down, and look at the slop. Two highs, a lot of gyrations back and forth. Really didn't go up here, finished marginally, down on the day. So just not a whole lot happening. Now, I have seen days like this when Holly does much better than she did today, but today I could just tell by what strategies were firing off and the different longs and shorts firing off in each strategy that there just wasn't, the setups just weren't happening. Well, the setups obviously were happening. That's why we were getting the alerts, but there was just no follow through in either direction. But it was interesting. The bottom one down here is NEO. You're going to see NEO was predominantly to the downside. Now, she did come in, or he, I guess NEO would be he, come into.
This is going to get confusing when we start keeping new names.
Yeah. I'm just going to say NEO. I'm just going to
put gender pronouns in front of all the Holly segments.
Exactly. I think you're right.
They, he, her, she.
So yeah, look, she had a lot of shorts today. Okay, 2.0 had a lot of longs, and 2.0 did quite a bit better than Neo did today. But Holly Grail had quite a few longs too, and she didn't fare so well. So this is the old original Holly. Risk off down 99. Risk on and 2.0 was really good, 2.15, but risk off was only up 51 cents. So that doesn't surprise me. I'd like to see risk off better than what I'm seeing in these other two cases, but when I look at the backdrop of the market, it just, I mean, any strategy is going to have a difficult time in this market. That's why we say, guys, no matter whether you're playing your alerts, Holly's alerts, another strategy, I mean, you have to look at everything, you know, through the backdrop, you know, of the market prism. And today it was, you know, red flagged, you know, it's just very noisy. I remember days like this as a discretionary day trader, you know, these are tough days. No direction in either way. So Steve, I'm not going to sit here and break down good trades and bad trades. You guys can look at them yourself. I mean, for every, you know, good one I look at, there's going to be a bad one. And I will say this, not a lot of stop losses today, which is good. So a lot of reduced risk. That tells me, you know, Holly, and in some cases, some strategies did better, but if you'd have held on. But I like it when I don't see a lot of stop losses. It tells me her exit strategies are tightening up. She's saving her profits and she's reducing her risk more, which is it's going to be good to you, especially when we get into auto trading, I think.
Yeah, Waleed points out that ESV had the same trade in two buckets, but the same strategy at the same price. Interesting.
Yep.
You don't see that a lot, but you will see it time to time.
Sometimes, yeah. Sometimes now the difference is probably a filter is going to be slightly different in these two. So, but that doesn't mean they still can't all come together at the same time. So
they did.
But Holly's right. I mean, he's right. And it is the same strategy too. So it's not, you couldn't really call that double confirmation. So I'm not sure, you know, if I see it in another one with a different name, I get more excited than if I see it like that, obviously. All right. Well, I'm going to shoot it back to you, Steve. Like I said, yeah, there's not a whole lot to go over. Just a ho-hum day for.
I'll show a little bit of how you can build this. And again, our intent is not to tease you guys, but to let you know that we're listening, and we knew that this was the number one way or the number one request on people's minds out there, especially coming through Barry's room. He gets a lot of color feedback on what the users would like to see. So what Andy showed you was the Omni channel. That is, as it sounds, all of them all together in one place, and that's what you would see on Andy's screen if you click that. Notice on my screen last week, I demonstrated the custom channels. So if I click that original one, this was the layout that I was using up until last week, but when I want to keep an eye on all three Hollies and still my stuff, I created a custom channel with them in there. So, and again, when you get the version that allows you to do the same thing, what you'll do is you'll start from the new welcome screen menu and go AI, iHolly, and this is the main window. Now notice the way I have it set up, I'm just looking at one parent window at a time. I don't need to see the parent window data of all of them, although if I want to, of course, I can go back with segments, and I can. But what I've done down here is I have spawned 3 AI strategy windows, and then inside of each strategy window, we also now have this segment. So this one is pointed towards Holly 2, this one is pointed towards Holly Neo, and this one is the original Holly Grail. So I have now used this desktop space to just, I want to keep mine open. I like to see if things come in. I'll tell you what, if it's really interesting, if things start coming in, let's say tomorrow, I'm total hypothetical here, but let's say tomorrow we open up okay, and around 10 o'clock Eastern, all of a sudden I see all 3 windows are populating with shorts, and shorts. That's statistically significant. You've got to pay attention to that. And that's one of the main reasons I like having all 3 windows open now, is I can start to see directional biases develop throughout the day. And also any new strategy that comes in, we can quickly click into it and see if we like it on the chart, whereas before we had to pay attention to these channel bars. So the channel bars are still there, and I'm still getting data from them. I'm still kind of looking and seeing at a thumbnail if all three are on risk on or all three are on risk off. And we haven't really had a good day in the last few days where it's a confirming directional, confirming risk on or risk off bias. It seems to be kind of one or the other, or 2-1 and one or the other. So I like to see that still using the channel bar. But I don't think it should be too long. We're not really seeing too many issues. One of the issues we did see, and maybe you heard this today, Andy, if I click yesterday in Holly, this is yesterday's history. What was happening is the data was disappearing. And the reason I'm showing you that is because there it goes, bye-bye. There's a bug right there. So that's why I'm showing you why we don't release this first until we first identify and kick the bugs and throw the thing around a little bit like a Samsonite suitcase and see if we can break it. But all that said, hopefully in a week or two, you guys should be able to have this beta version as well. And again, you can go to the Omni channel and see them all laid out in a pre-configured layout, or you can bring down the main window like I did and then spawn 3 trips and spawn 3 trade windows and segment those to the each 3. Now you're never going to miss a new trade in real time, and you'll start to see the directional biases if they ever do come in. So that's how I have chosen to do it, guys. All right, so let's see. Questions are good. Let's go into...
I'm just going to throw this out, Steve.
Sure.
I don't know if it'd make a difference. You have on open positions. I wonder if you did history with it on open and close. It's probably not going to make a difference, but just
okay, let's try it. Because you know, we're troubleshooting as we speak.
Yeah,
here.
yeah.
Because Dave has been tasked to do that. Oh, that was still on history. I never changed it back. Let me try this one.
Oh, when you pulled it up on closed, it actually pulled it back.
No, I don't think it did that either. I pulled it up on open. So you might be right. The fact that it was in an open position, it still should show the history. It should.
It should. I'm just wondering if that's the bug, because now.
I think you might have isolated it. So after our webinar here, I'm going to drop Dave an email so he doesn't run around with his head cut off and just say it appears that if you run a history with an open menu, you're going to lose your historical data in the next refresh. And that's what's happening. It's refreshing the box. All right, let me make a note to tell Dave that. So guys, when you finally get this version, it'll be bug-free. Okay, so we're going to the trade of the week now, which is a DNR. And for the last 7 weeks in a row, we have pulled our trade of the week from the composite rating. Oh, that's from this morning. Actually, let me do this. All right, so the trade of the week was derived with 1, 2, 3, 4, 5, 6 or so symbols, and about four or five or six out of these are energy stocks. And I found that kind of interesting because coming into the last week, this composite rating that we've been talking ad nauseum about has been just chocked full of great ideas. But as we've been talking about the market falling out and things kind of decaying, we're seeing it in this actual scan. I don't know how DNR did it, but it made my cut at 90 on Friday, because today it's back to 90. Look at that, Andy. How about that? But where I'm going with this, and where Andy and I are going with this, is our pickings were kind of slim going into the weekend, and I noticed that all of them were energy related. Well, I wasn't really scared, or we weren't really scared of energy related stocks. They've been on a nice tear lately. Energy, USO, XLE, UNG, all good stuff. And so when we pull up the DNR, we can see it looks very much like UNG. That's the nat gas ETF right there. And here's DNR. They drill for oil and natural gas. So those charts, they were okay, but they were the only sector that you could find on there. I thought that was notable. And then secondly, the amount of picks was notable. I mean, we had to literally stretch this thing down to here to see them all the last month, few weeks. Now our pickings are really slim because we're using the composite factor. And there's not a lot of stocks right now that are hanging out in the A column category of the 90s. Well, DNR was one of them, and of the ones that we had to look at over the weekend, it fit the mold of trade of the week the best. Specifically, let's look at technically here. Nice trade, nice trend, holding that 20, and then it showed itself. Big move I always talk about, consolidation sideways, a little bit of backwardsness. All it had to do was tag that line. It didn't tag the line this day. This is something Andy and I have also noticed over the years when we were trading our mirrored account with people attached to us. We'd say, boy, I really wish that XYZ would tag that fast line so we can get it over with. It just seems like it doesn't, most times they don't want to bounce until they've at least touched it, kissed it, put their finger on it and tagged it, and then they move higher. So this day here was the tag in DNR, and then another push higher. Well, then we had 2 days of sideways action. Quite honestly, I'm really happy with what happened yesterday. A third day of pullback, and right here on Friday, we did not tag the 10 period. But yesterday, Andy, you'll be happy to know we did tag the 10 period. So we checked that off the list. We got that out of the way. Because in our warped minds, we feel like sometimes these things literally have to back up and touch that wall. These are OCD stocks. They gotta come back and flip the light switch 3 times, and then they're ready to go. So DINR got its OCD-ness out yesterday. It touched that moving average and closed, no harm, no foul doji, and then gapped up. We got ourselves a little green bar. Now, obviously, I would love to have closed above our entry signal and have a nice big green bar closing on highs, but as the market did, as a lot of stocks did, movements that pushed got reversed and squashed and pushed back. Not exactly what I want to see, but again, the backdrop of our market is not really conducive to, getting disappointed on something like that, DNR not following through today. So what I'm going to say, guys, is going forward, start putting a lot more weight and credibility into what's happening in the bigger picture in the market and the cues. All right. If you turn around tomorrow and you're long DNR and these spies break down and start taking out, this orange line and start moving lower, I would not fault anybody for getting out. That's like Holly doing reduced risk. All right. Everything's changed. We're reducing the risk here. We're pulling back. We're cutting out because the market is not conducive to an uptrend in a single stock. When the markets are crashing, pretty well better guarantee they're taking 9 out of 10 things with them. The only things that are not crashing are probably defensive in nature, as money's looking to hide and seek a refuge. So where we are currently, I would have liked to have seen a higher close, but we got a bit of a rejection wick. That's in the con column. In the pro column, we had a nice pullback off a big green candle and pushed higher. We're still above the rising 10-period moving average. I believe the stop in this suggested trade is anywhere below the rising 20. But again, if I say tomorrow that we start breaking down heavy on volume and you break the 10-period moving average and break Monday's lows and start heading towards that, I would not fault anybody. I would not fault anybody for getting out because you're managing your trade. All right, you're managing the trade. I know I've often said, let it wiggle around, but that's in a healthy market. Let it wiggle around and do its gyrations in a healthy market. But in a non-healthy market, you are never in the wrong for ditching a trade and saying, conditions have changed, I'm getting out. And again, Holly does it all the time. We just call it reduced risk right there. So,
it's a beautiful setup, but at the same time, I do with this with a lot of trades. If it does not do what I anticipated it to do, in other words, reverses and comes back down through my entry, then yeah, or not maybe my entry, but through the support, that it has built up down there at yesterday's lows, and yeah, then I commonly, and Steve does too, will remove, will move our stop loss depending on the market and the environment for sure.
Your reason for being in the trade has now changed, so there's no reason to fight it and be a hoper. Just learn from Holly. She does it all the time. Gets into a trade, it moves, and then it goes nowhere, and it starts to bleed, and there's still 45 minutes left on the open trade, and it's still bleeding, and Holly goes, nope, reduce risk, cut it. So it's a great example of tying the human and the machine together, of how she does it and how we can do it as well. Again, your number one thing to keep an eye on is going to be the S&P. Your number 2 thing to keep an eye on is going to be the oil commodity. USO is the oil commodity. If oil rolls over and starts puking, chances are the energy stocks and the oil and gas stocks are probably going to follow. And just so you also know, UNG is the natural gas. So you can keep an eye on those 2 commodities when you're in a trade that is like DNR. Another reason I liked it was under $10. A lot of people seem to like, the lower price stocks. You can get a little bit more bang for your buck, and sometimes you can get sometimes you can get more of a percentage move than you can with an Amazon or an Apple in these smaller guys. So, excuse me, that was the reason for the trade. Real close to maybe going all cash, calling the trade of the week cash this week, but we had enough energy stocks on there that looked like something would be okay to call. But again, if this week doesn't bounce and we roll back over on some more red candles, don't be surprised if we see cash for next week's trade of the week. We're not going to fight it. All right, we talked about the new Holly demo segments. We got ahead of ourselves. We talked about DOA. Okay, so we're going to review last week's alerts and maybe a few ones this week. Now, before I even go into the price alerts, we were discussing last week, a lot of these price alerts might be good for a day or a day and a half, and that seemed to be proving on a few of these. So as we go forward with the new ones as well, we will definitely put that disclaimer out there. Looking for 3 or 4 days of movement, and some of these might not be as easy as we would hope. But last week we set up a alert on GBX, and this was the best of the bunch. There's our green line, like the sideways action, and then GBX had a good short float. Really nice move. I mean, that's beautiful. Nothing to complain about there.
No, nothing there, man.
Even Holly tried to jump in the way of it yesterday, and it looks like Holly got run over. So that one was a champ. The SBSs, remember I threw this one in there just in case the market did break down, and it did break down. The green line is in the money. So just like the S&P price was pulling back and loitering at the pullback, well, that's what the SDSs are doing up here. They're pushing higher, and now they're just loitering at the ceiling levels, looking for a reason to push through. This is definitely intact. You know, if somebody heeded advice on that, there's really no reason to get out of these just yet, especially if you're using it as a hedge. You can have a couple of long positions and then take a position in the SDS, and if it works, if the market falls, you're protecting your losses in the other ones that are dropping because you're making money in the SDSs, and it's a great hedge vehicle. So that one worked okay. Echo Andy's idea. Okay, let's look at our notes. Maybe good for a 1 to 1.5 day bounce. We got 1 day, and that was about it, and hardly even much at that. It was just a simple bar reversal of 1 day and then following back down to the woodshed. So there's going to be probably a lot of those notes in today's ideas too. Maybe good for a 1 day bounce, hit it and run. ERI looks like it didn't do anything. It actually was horrible. It triggered and then fell. We don't like those. The other ones did nothing. So let's go ahead and clear these out. And I normally had most of my last couple of weeks, most of the stuff I was coming up with came off of the composite rating, but I literally, like there's our buddy GBX, wouldn't buy that here. That was a great setup last week with the flatness. So that's out. Wing, yeah, that looks pretty. DNR, there's our friend DNR. PINC, broke out, head fake, came back. And then the very last one on the buy, and nice trend, but it seems to just be hard to pick the right spot. Nothing is really looking good on here that I can say. So I did, in fact, go through all Holly segments and looked at all trades. And if anything caught my eye of interest, I wrote it down. So we can share a couple more. Thank you, Waleed. We can share a couple more, but again, a lot of these are probably going to be, don't stick around too long. We don't know what this market's going to do, and if we do get some movement, it might be short-lived. So I'll start in with these. Looks like we got some time. So the first one, again, these were all found from Holly trades today. NBL, all right, broke out of that nice wedge. We can also see the 200-day moving average probably was putting a lid on the stock, and today we popped above and closed above. Not bad. Let's look at the bigger picture here. It's kind of a reversal coming out of a big base. You know, maybe there's a good case to be made for a price target right there, and we'd put it above today's highs.
Another energy play?
Is it? Okay, I didn't even get to that part. 32.74 we want, which is a penny above yesterday. Now, we could even put our price target in there. Price target of, what was that price target? I can't, I'm gonna have to go back here and do that. We'll call it 33.50. All right. Shoot, I've already forgotten what my 74. Okay. $33.50 target. Don't stick around too long if it goes, because these are still coming out of base buildings. They're gonna find their levels of resistance a lot easier than something breaking the 52-week highs. ARQL. Here's another one. Just looking for a simple bar reversal, oversold, 1 day bounce, get in, get out. And that's it. That's really it. Who knows if this will even trigger. 426 is what we want. And we'll just mark up what we're doing. We're looking for a bar reversal, maybe a 1 day play, and bail. ACAD. Looks like we might get through these a little bit earlier than I intended on finishing today. So guys, if there's anybody out there that wants us to look at a chart or two, you can think about that. And then when we're ready, I can call for it and we can take a look at some of the stuff you want to look at. Here's the old, well, it's a downtrend. I can tell you that because of the way the moving average is coming, but definitely broke above its resistance and its downtrend. Had a big day back here, probably earnings, sideways action, a lot of sideways action. And we're just going to watch for a break. I'm going to put it above the highest candle, 22, 23. I'm going to type in coming out of consolidation, maybe good for a 1 to 2 day hold. All right, what else we got? I got two more. ORIG is one of them. Kind of similar to the first one we set, which I think was NBL. Yep, sideways action and then breaking higher. ORIG, nice sideways action. And remember, GBL, that's the one that did us right last week. That's, no, what was the one that did us right last week?
GBX.
Thank you. I'm just trying to show that that was also going sideways. So as we come in here to ORIG, looks kind of like GBX did last week. A lot of sideways action, starting to peek its head up. A little bit of a reversal at the end of the day. So we're going to set this basically at a new high. What is that high? All right, we'll go 87. Excuse me. Again, I'm really trying to qualify these as much as possible to not go for the jugular until the market wants to show what it wants to do. Lastly is AMD. This was a great stock last month. It's had a big pullback, kind of like those IWMs, but it's basing and holding at a really interesting level, pivot level from back here. Won't draw it, but it's there, that red line swing exit. And then look what's coming up to meet it, a nice 50-day moving average. It actually did do a bar reversal today, but kind of suckered back a little bit. So we'll go at today's high, and if it can follow throughout today, again, maybe a 1 or 2 day bounce. 27.72 is what we're looking for.
That's pretty good.
What's that?
That looks good. Yeah, that
one? Yeah.
Yeah, well, it's low risk. Low risk. If it comes back and breaks down below those that double bottom in the last 2 days, get out.
And again, this one might run into the same kind of trouble that the other stuff in the market, S&P Qs I talked about, could get some support bidding here, a little bit of a bounce for a day and a half or two. But those moving averages are rolling over, and they're gonna have something to say about moving through them when they eventually meet. All right, so let's kick those out. While I'm coding these and sharing them, again, if anybody has a chart they want to look at, Andy and I can put a pair of eyes on it and see if anything makes sense. So 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. That's it. That's all we have today. All right, it is what it is. We're not going to force things. Share 5 selected price alerts, copy, put that back down, and then we'll go to the chat window here in the GoToWebinar. I'm going to call it price alerts. Shared. Control paste. And for those that want them, you can add those active price alerts to, oh boy, to your, they'll pile in and they'll add them to your existing price alerts list. Okay, so Prabha wants to know about shop. And Lynn wanted to get, Andy, could I get your alert for dividend stocks with yield? Well, that's a specific request.
Yeah,
all right, and then Don. So Don wants to look at BA, And then we'll look at, just for fun, we'll look at Snap. So Boeing doesn't look bad. Does not look bad, guys. Beautiful trend, held the 10 period back here, 3 tests, moved higher, 2 or 3 days of selling. Yesterday, tagged that rising 10 period with a nice bottoming tail and did not really give anything back today, even a tighter range, still above the rising. This looks great. What I would do, Don, is, looks like the high is probably the same for both days. Is that right? Well, that's a big one, 86.73, 86.82. So you want to go 86.83 is what you'd want to do, and just put a price alert in there if it can take out today's highs, and obviously a constructive backdrop in the market cues and spiders would certainly help as well. But that's a great looking chart. Fanned out moving averages, and all of them 10, 20, 50, 200. I can't say anything bad about that. Can you, Andy?
No, not at all.
I didn't think so. But can you say something bad about Snap?
Oh, yes, I can.
Exact opposite. We got the 200 above the 50 above the 20, and the 20 above the 10, and the price nowhere even near the declining 10. So a mirror opposite of what a trend should look like. This, honestly, guys, this is a sad case of the millennial generation learning about IPOs and how the stock market works. You take a great product that they love to use, and they were all fired up to buy it back here in the 20s and 30s, and this thing's going to sleep, everybody. I personally don't know, nor do I care how Snap makes their money, but the footprints in the sand, this is the Gulag Death March here. This is not going to end well. The hard part is every now and then you'll get somebody trying to prop this thing up with a PR release, and boom, it'll pop up and erase 4 or 5, 10 days of down movement, and then it just resets the clock and starts to slowly trickle lower again. I don't see anything good about this company technically or fundamentally. So hopefully you weren't looking for me to say Snap looks like a raging buy right here for some reason, because I just can't see it. All right, anybody else? Those were the only 2 guys that put a symbol in the window, because if that's it, then we're going to be done for the day. I'll give you guys another few moments or so if somebody does want to type one in.
And while we're waiting, Steve, I want to explain to Lynn. Lynn, I put that yield watcher into the chat window. Now you know that needs a custom formula to it, so I don't know if you already have that custom formula. And also, I have that looking at the DVY, which is a very popular group of stocks that a lot of the hedge fund, mutual funds and fund managers and money managers look at when they're looking for dividend yield. So you can create your own symbol list, or if you don't have the DVY, you can find it really easy. Just do a search for DVYs, top symbols, and you can find it. So, but shoot me an email if you need that custom formula put into your back office, and I'll do that for you.
Javier asks about A-bill, and A-bill is an interesting chart. Many charts look like this. They come alive for whatever reason, and then they go to sleep, and they never. It's like the other side of the mountain, I called it. Just once you get the other side of the mountain, it's really hard. There was something they tried here, but that didn't really work. And then they tried something here, and that each effort to boost this thing is a little less amplitude. What I'm getting at here is there's really nothing to like about this chart. You're a hoper if you buy it here. It's below all averages. It looks like it's just knocking on the door to come down here and fill this gap. When stocks do this, if they don't dig in right here and then start moving higher again, they're done. They're just done. It's like a one and done. An attempt for a second round, but nothing really there, and hardly a third round. Not a good looking constructive chart. We'll do 2 more. We got 2 more. NVIDIA. As we know, the semiconductors were great last month, but they got beaten up pretty hard. So this entire movement has been erased. It's a complete TP. It's a complete reversal. If we were to look at this on a weekly chart, it would probably show a big wick or 2. Where to go from here? NVIDIA is still in its uptrend. Big volatile day yesterday, big elbows being thrown, smaller wick today. Both days, yesterday and today, are below their 50-day moving average. I think you're just going to have to keep an eye on the SMHs and see what they want to do. And as you can see, the SMHs had a sector fall from grace there. They did look like they're trying to hold some support. But I would keep an eye on the sector as a whole. AMD, the last one we marked up, also was a semiconductor that did a bar. Well, hopefully, it's going to do a bar reversal for us. So I would keep an eye on the whole sector because I'm not really seeing anything setting up in NVIDIA. I'm just seeing a lot of noise at the moment. And I don't like the way it gave back. If it was resting up here at this 280 level, we might be talking about a different story, but it gave all of that back, and it's going back. NIO, ooh, new issue, but interesting. Looks like it's trying to do something. So a new issue, big move, gave a lot of that move back. And it looks like, the relative volume today on this was almost 0.2, 2.0. Not bad. I mean, there very well could be some follow through in this one tomorrow, but keep an eye, looking like it did over here. 1 day and then a half a day, day and a half before these things fall apart. So maybe give this one a half a day tomorrow, sell half if it works and see if the other half, but that's not bad. It's a new issue, so there's not a whole lot to go off. And then yes, we will honor the last request of Square for Don. It looks a lot like that NVIDIA chart. So same thing, big movement, gave it all back, filled the gap. It is above its 50-day moving average, which is rising. This chart isn't as quite as noisy as the NVIDIA chart with the wicks and the volatility. I mean, I think you don't want to give up today's low. That's the 50-day moving average. You just want to build on this level right here. It could, but again, I think it's all going to depend on what's the backdrop of the market going to do. We're just going to make a lot of noise in the Nasdaq and Qs, and then nothing's spiders, and then nothing's going to go anywhere. The trend looks good, but I don't like how it gave back that entire move. We'll leave it at that, unless you want to say something about it, Andy.
No, it looks good. You're going to see a lot of setups like that in the environment we have, and you just have when we get into an environment like this where you're not really sure the direction of the overall market. It's okay to take trades like that. You just can't get married to them if they don't work. Right. You have to draw a line in the sand and cut it when it doesn't work. Especially if we get in a bear market, guys. That's how people get destroyed. It's okay to try a bounce every now and then, but if it doesn't work, get out quick.
And trust me, we're looking for that day to turn around and really show you guys how Holly, hopefully in the future, saved people from plowing into the market and buying the dip when the AI is showing us that that's not the most statistical probability. I don't have an example to show you, but I'm just saying in the future, we're looking forward to that day where we
did have one pretty good day the other day. Yeah.
And they might start popping up here and there a little bit more, but trust me, when those days arrive, we're certainly going to point that out to you to try and drill home the value of following the path of least resistance and statistical probabilities. All right, so that's that. With enough said, go ahead. I'll put the slides up, Scott, and come on back in and finish us up.
Unmuted.
Thanks, Steve. Thank you. A couple items on the way out. There's a webinar. We have a podcast that you should be subscribed to. Just search for Trade Ideas Podcast in whatever application you listen to podcasts in. Add us as a subscription. You'll be ready to pick up the new one on Friday. And you can cruise through and examine the previous releases. Look for the ones with our guests, and those are some of the most popular. So again, just search for Trade Ideas Podcast and add us. There's an ebook out. Hopefully all of you have downloaded it. If you haven't, go to trade-ideas.com/ebook. Both Andy and Steve contributed chapters. It's how to survive in a post-BTFD market, and we released it in February. It was very timely for what's happened this year. There's an event coming up. All the in-person tickets have been sold out for a while, but you can watch it live and then get early access to the video archive of it. It's got some great speakers lined up. It's free for you if you're signing up for the live stream, trade-ideas.com/livestream. Just sign up for that, and you will get notified of how to watch it and how to get the videos. We have a new code for October, so it's fall savings, all caps, because it is case sensitive. So you can use that either to upgrade from Standard to Trade Ideas Pro, or to start any Trade Ideas subscription and save 15% off the first month or year. If you have any questions, email us, info@trade-ideas.com. Give Steve a follow on the Twitters at Today Trader. We also have at Trade Ideas. Facebook.com/Trade Ideas Pro is the place to like us on Facebook, so you can share everything we post with your friends. And info@trade-ideas.com, again, is the support email that goes into our help desk software so we can route it to the appropriate team member to help you out. That is the best place to ask questions. Thank you, Steve and Andy. We'll have the recording up later on tonight or tomorrow.
All right, thanks. See you next week.
Thanks, everybody. I'll see you Thursday.